Hello there. Today I want to chat about one of the weird things that come up in your bookkeeping. It's usually the transactions that don't happen very often that are the tricky ones to understand. If we don't deal with them, then we don't know how to deal with them, and sometimes we don't do it for maybe months. And then, it's like, how did I do that again? I know I did it once. That happens to me, certainly. I try to write down now how I've handled odd transactions so that doesn't happen, but I don't always remember to write it down. So today I want to chat with you about one of those transactions that happen. It's when you get a refund or you give a refund. So refunds as a whole. So let's start with a refund that you might give to a customer. So somebody has purchased something from you, and then for whatever reason they've decided they don't want the product, or they want their money back, or they want part of their money back or something. So you have to give them a refund. I'm not going to chat about how to logistically actually give them their money back. That will depend on how they paid you in the first place. Usually that piece is not the tricky part. It's how do we record it once we've done that. So there are two options for this. One of them is that you have a separate account called refunds, and you can just post it back to that account. Or you can put it back to the original income account that it came from. So let's unpack that a little bit. So let's say that you do a fair amount of refunds. So maybe you have a product that you sell. You sell a lot of small dollar items, or you have a subscription, like a small dollar subscription, maybe to an app or something that you've built. And so you want to be able to track refunds separately from sales. You want to be able to see those two numbers separately. Then I recommend having a refunds account set up in your books. It will be an income account, but it will be kind of like a backwards income account. So it will have a negative number in there. And when you look at it, you will see the sales number, and then you'll see minus the refunds, which will give you a net revenues number. So that's one way to do it, is to post the refund or record the refund into a specific refund account. The other way to do it is to record the refund right into the original income account. So say I sold a service, and my account that I'm recording all my income in is called service revenue, then I would record a refund as a negative to my service revenue. So it's as if I didn't make that money in the first place. At the end, when you net them, it looks like that, but there will be obviously a timing difference from when you put in the original income to when you put in the refund, because the refund date needs to be the date that you actually paid back the money to your customer. So those are the two ways to record refunds. I personally just put it back to my revenue account. I hardly ever do refunds. In fact, I don't think I've ever done a refund in my own business, but I would put it back to my revenue account because it's so rare that would happen. But I do have clients that do smaller dollar transactions, and they have a fair number of refunds. So they want to be able to see refunds as a separate number from their sales account. So both are correct, but it depends on how you wish to see it in your books. So the flip side of that is when you take a product back to a store and you get a refund from that store. And this one actually probably happens more often, hopefully happens more often, than when you have to refund a customer. So in this case, it's similar in the sense that we want to put it back to the account that it came from in the first place. So let's say I bought a pen. Let's say I bought a pen, and that pen didn't write, or it was like cracked or something. For some reason I wanted to return this pen. So I probably would have recorded the original purchase of the pen to office expenses. So I would have if I'm in QuickBooks in my bank feed, I would have said, office expenses, and I would have had the sales tax on it. And then later on when I returned it, I would see a negative on my credit card because it was a credit, like a refund to my credit card. And I'd want to make sure that that refund amount went to office expenses as well. It's going to look a little bit different than all the other transactions that are in office expenses because for the most part, they're money that I've spent. But this one is going to be money that I've received, so it's going to go the opposite direction when you're looking at it in your reports. We put it back to the original expense account, the office expenses, because we want to basically nullify the original purchase. So we're saying I bought it, but then I returned it, so really it should be 0. The important thing to remember about both refunding a customer and getting a refund is that you want to put in the sales tax in the same way that you did for the original transaction. So if you charge GST on your service, then you want to make sure that the GST that goes on the refund as well. So the portion that you refund to your customer is you're refunding the GST that they paid on that as well. And when you get a refund, you want to make sure that you credit, that you add the GST or HST to the refund that you've got as well. So 2 sides of the same coin, and the same or a similar procedure for both. And that's how you handle refunds in your books. If you have any questions about that, or you have questions about other strange transactions that have happened, then you can book a call with me. You can book a free 30 minutes. Or if it's a more general question about bookkeeping, feel free to leave them in the comments and I will either answer them right there or I'll do a whole live video just for you. I have included a link to my booking calendar so you can book a call with me if you'd like to do that. And I've also included a link to a free PDF that I created. It's the 7 most common accounting mistakes that small business owners make and quick fixes to get yourself back on track. It's a short PDF. Each mistake is 1 page, just describing how the mistake usually happens, what the issue is or what the cause or how it's impacted your books, and then how to fix it. So that is my gift to you. I've left the link in the description. I will see you tomorrow.